Hello, everybody, and welcome to the 100-Year Real Estate Investor. We're your host, Jake and Gino, and this is a show dedicated to long-term personal financial engineering. Gino, how's it going?
Jake, I'm trying to rip the Band-Aid off here. Give me a second.
Step up to the plate, put your helmet on, and dig in. All right, it's time to roll. Here we go. Got a great guest today. Our guest today is a managing partner for DealGen Partners, a deal origination company that manages $2.7 billion in buy-side mandates. He started DealGen Partners with a mission of delivering quality deals to companies in acquisition mode. So without further ado, Brian Scanlon, welcome to the show.
Thank you, guys. I appreciate it. Thanks for having me.
So I guess, by looking into you a little bit and this intro, I'm sure you went to college, got a degree in exactly what you're doing. And that's the reason you're sitting exactly where you are today. You followed the path and that's how it went. So I'm kidding, obviously.
Absolutely. Perfect straight line.
Straight line. No kidding. So just give us a little bit about your background and what you think it took to start DealGen.
Yeah, absolutely. And, it kind of starts in college. So I went to Babson College outside of Boston in Wellesley, Massachusetts, one of the best schools in the world, if not the best for entrepreneurship. And I kind of decided that when I graduated, I wanted to be a baseball coach instead of an entrepreneur. So I had started a business in college by accident. My aunt had a PR firm, and she said, this was 2006, and she said, hey, we have a client that wants to be on Facebook. She was 55 at the time. She didn't even have one. And I was the only person she knew with a Facebook account. So she said, I'll give you $500 a month if you start posting things on behalf of this company on Facebook. And for me, that was 500 beers at the pub on campus. So I jumped in, head first and said, I'm in. And then that took shape and turned into actually building a marketing company. Another client came about. And when I graduated, I wanted to pursue being a college baseball coach and continuing to run this marketing company. So as I started doing that, I had a pretty cool experience being a coach, got to coach down in the Cape Cod League with some amazing college baseball players, a lot of pros, now. But it also opened my eyes to making $500 a year as a college baseball coach wasn't really the route I wanted to go. So I ultimately sold that marketing company and joined up with the small M&A shop that helped me through the sale as a sell-side M&A advisor. I had a 12-month non-compete, couldn't start another marketing company. So said, why not? Let me try this, investment banking stuff. And we did really well with acquiring deals to market, and we were pretty horrible at getting deals to close. So along the way, in a matter of 2 years, I watched, about $3 million in success fees evaporate in front of my eyes that, would have been my take. And I was already cashing the checks and figuring out where I wanted to buy a vacation house.
You didn't have the due diligence. You're just bringing deals to market that, or, to your buyers that just, wouldn't check out, I guess. There's probably issues, solopreneur type things.
Exactly. Exactly. At that time, it was, representing a company through the sale. So, we had a deal die because one of the owner's wives changed her mind, said, hey, I don't think you should sell the company yet. We had another deal die during due diligence because the guy said, you know what? I don't think I like the guy that they're bringing in as a CEO. So $25 million deal evaporated
Emotions,
overnight.
Man. Emotions is getting into it. Yeah.
And you know what? All of the things that fell apart were emotional decisions and not financial decisions or business decisions, which I took a step back and said, all right, every conversation we have with buyers ends in the same way. Hey, thanks for showing me this deal. What else do you have? And what we did in the marketing company was we were very good at lead generation. So I stepped back and said, hey, can we do lead generation for private equity companies in the sense of finding them more deals to look at? Every one of them will tell you we need more at bats, right? We need more chances to close deals.
Was there similarities though in terms of what they're looking for? So were you able to systematize what good looks like to these folks so you could be more efficient in your time?
Yeah, absolutely. And that's where the marketing hat came into play. Being able to use data, being able to use automated outreach tools, and basically customize things to the masses, to which these private equity groups were not doing. They hired a couple analysts fresh out of college who have never done any business development ever.
Go bring in some meat.
Yeah, go call a company and try to convince them we want to buy them. And they're mumbling and stumbling, and they can't do the same conversation.
Was there a framework though, in terms of what good looked like for these private equity companies? Like, can you break it down in terms of what a solid B would look like, coming across?
Yeah, absolutely. So we have, like you said in the beginning, 2.7 billion in buy side mandates, and that covers a variety of criteria, right? So we have what good looks like is relative. Right. I like blondes. You like brunettes, for lack of a better description. Right. So what some of these funds look for. Okay. Then you could have them.
I got one. That's all I need.
Yeah. So these guys, like, for example, we have a group now who they look for flat or declining software companies, right? So to them, a good deal looks like a company that has been steadily trucking along at the same revenue for the last 5 years. Private equity group number two looks at that and goes, that's a horrible deal. I want a deal that's growing 25% year over year for the last 5 years. So the eye is in the, the beauty's in the eye of the beholder, essentially. But they give us criteria.
Perfect.
They say, hey, we want to go buy this. You go find it and bring it to us.
You guys
and
are
we
deal
do
dogs.
that. We're deal dogs. We're a farm, right? So we're farming and they're hunting and gathering. They're trying to pick these deals off, and we have a ton of deals coming inbound. We evaluate them, and then we figure out which one of our buyers.
I'm so fascinated, and I just love deals. I love because we buy multifamily deals, so it's like the same thing over and over again.
Yeah.
We're probably more on like the PE side, even though it's internal capital.
Correct.
So give me an example of a recent deal. I mean, don't get too much into like the actual players and things, but give me an example of a deal you just did. I'd love to just kick it around with you because I love this stuff.
Yeah. So we got a deal closing right now for that company that looks for flat or declining software. Yeah. Right. Perfect example. Their motive is a little different. They're not like you buy a multifamily to improve it potentially and flip it for more profit down the line.
We're holders.
Okay, so they're holders as well.
Yeah.
So they buy, they improve, which means we're going to cut the crap out of all your costs. Yeah. We're going to absorb a lot of synergies, and then we're going to hold for profit forever.
Because you already have the infrastructure.
They have 900 employees and 200 acquisitions, right? So they're looking at a company right now that is a perfect strategic fit for another company that they have as a platform style investment, right? So they're plugging it in to them. They're buying the parcel of land right next to the multifamily home you just bought, essentially, and then we can build another one. So they're closing a deal right now. They do deals and very quickly, and they do deals for 100% cash at close. So for them, they're not giving high multiples, but they're coming in and saying, hey, you've been flat. Nobody's going to give you a crazy valuation. We're willing to give you cash in 45 days for 100% of this company, and then you're done. You can go move on to your next venture.
They have their systems in place, so they get additional cash flow from doing it, and they're not paying a premium. So it's beautiful. I love it. I love it, Gino.
Yeah. And we found that deal through cold outreach to the company. Said, hey, we have someone, based on what we know about your company, we think we have someone that would want to buy it. They said, sure, we'll listen. After we spoke to them, we made the introduction to the buyer. We did some liaison work and that, and got some data, et cetera. And then made the marriage, and they take it from there and go close the deal, and we get a check, hopefully.
We talk about this, Jake, and we talk about this in the education of multifamily. What he has is basically a buy right criteria. And for everybody out there, whether you're buying a business or buying a single family home or buying a multifamily, what's the median income? What are you looking for as far as unit mix? What are you looking for as far as price per door? What are you looking for as far as size of the asset? And once you get crystal clear on that, the opportunities will come, and you'll be able to say yes to one opportunity and no to another opportunity. So I think that's the beginning part of when you're looking at buying a multifamily. But Brian, when did you realize that long-termism really is the way to build a business? I mean, the instant gratification, buying and selling businesses, you're getting big chunks of change, and all of a sudden it goes dry. And then you got to keep doing it. And you're not really building wealth, but you got these little shiny objects going on, and it can be really alluring to you.
Well, there's a ton of shiny object syndrome in this world, in particular in the seat we sit in, right? Oh, we found $100 million company on a cold LinkedIn message this morning, right? Guy said, sure, give me a call. Talk to him. $100 million company in the auto part reselling space. We happen to have 5 funds that look in that space that we could work with. Just totally stepped in shit with it.
How is he off the radar?
Private business, family owned, down in the middle of nowhere.
I'm sure you're buying data from somewhere, right? Like a lot.
Correct. We have a ton of data sources. Yeah.
But this was off, so he was not on the radar.
Mom and
you
pop.
guys discovered him. And I mean, you guys must be like popping bottles in the office when this shit happens.
Yeah, I mean that's a huge win, right? So there's two similar to real estate, right? There's deals that are represented by agents that everybody knows about that you can find on Zillow, and then there's deals that you don't know that the seller's willing to for sale by owner, essentially, right? And those are the ones that we try to find. It's even better than
that, because this is a comparison. So there's obviously deals that are on the market. Then there's deals that we'll just say CoStar has the data, right? That's like the big data hub. So it's in CoStar. Then for some reason, some of the deals are not on CoStar and people don't know about them. And we've had experiences exactly what you're talking about. We find out about them, whatever reason. They might have 5 scattered sites and they're just not popping on there. And then it's like no one has talked to this person. So they haven't been getting the calls like everybody, hey, you want to sell? Then all of a sudden you make a cold call and they're like, this is the first. Yeah, I'll talk to you. And that's, we get excited about that. So I know exactly, from the real estate side, that's a big win for you guys.
Absolutely. Absolutely. Because all our clients want those, what they would call proprietary deals, right?
Yeah.
I don't want to deal with the investment banker. I don't want to deal with the real estate agent. I just want to buy it right from the company. But to go back to your question about long-term thinking, it really changed our entire business model when we recrafted our offer to the same clients. We just started charging and getting paid in different ways. And it was more of a long-term way, right? So when we first started, we were taking that marketing company approach of you pay us monthly to do this, right? Which, okay, great. You're building monthly
what do you get
revenue.
For that? What do you get for the monthly? Like what, a certain amount of calls to potential businesses? Like what are they getting from you for that?
Yeah. So that's when we were, selling introductions to companies. We're going to bring you X amount of introductions per month, right? And we kind of stepped back and said, no, nobody wants more meetings or more introductions. They want closed deals.
Amen.
Right? So let's tie our compensation to closed deals, which means from the time we introduce someone to a potential buyer to that close, that could be 4 to 8 months, right? So that's a delayed gratification. So we crafted our offer in a little bit different way where we take what we call a working capital deposit, right? Which is short money up front for them, but enough for them to put skin in the game, because we were doing it without a deposit. And we realized that some of these bigger funds wouldn't really give us the same fair shot at seeing our deals as they would have, even if they put $1 into the pot, right? As soon as they start paying you for it, now they have a little more skin in the game. So we take that deposit and then we get a referral fee percentage of the deal value. So we bring them a $10 million deal, we get a certain percentage of that deal. Now, if we don't bring them a deal that they close in 12 months, we refund that working capital deposit. So we step back and said, all right, we're willing to put our money where our mouth is by saying we can refund this money, but we also want to be rewarded well when you guys, get a deal that you close on. But if you don't, you just got 12 months of deal flow for free. And luckily, since we made that change, a few years back, we have not had to refund that working capital deposit because we've been successful in delivering closed deals to clients.
Is it also viewed as a component or a portion of it viewed as earnest money for the sellers, so they feel like there's something for them there as well? Does that play into it or no?
No, so we're not tied to any proceeds from the deal, which is important in two ways. One, legally, we are not a broker dealer, right? We are simply a marketing company that's making introductions. So we're not advising on valuations, et cetera.
Gotcha.
We collect information. So that's the first part. The second is we sit in an interesting spot where we're still incentivized the same way the seller is. So when I talk to this $100 million company, I want them to sell for $1 billion because it's in my best interest too. However, we're getting paid from the buyer. So we can come in and say, we're not taking a dime out of your pocket. We're giving you a free look under the hood at what your company might be worth.
Nice alignment all around.
It's a nice alignment. Yeah. And we can, I don't like saying play both sides, but we can relate to both sides without a conflict of interest.
Yeah. Hey, we want to sell for the most and we want to feed these guys as much as we can. It's beautiful. Beautiful
absolutely.
Music being played there.
Absolutely. Yeah.
What was that inflection point like though? So when you guys switched and you started saying, hey, we want to build this for the long term, what were the discussions like? Did values come into play? And how long ago was that? I just want to understand that a little more.
Yeah, 2019 was when we made that switch from kind of a monthly retainer model to pay for performance, essentially. And it came because of a client. So one of our clients said, hey, you guys are doing a good job. What if we just, change the way this fee works and we give you a deposit up front and then we pay you for each deal that we close? Because they were switching their strategy in they got $800 million injected into them to go out and acquire. And they're like, well, maybe we can incentivize DealGen Partners by trying to close more deals by paying them a little more, but tying it to performance. And as soon as that client changed our entire business we stepped back and said, holy crap, like that's a way to turn a monthly recurring revenue into a 3, 4, 5, 6, 7, 800, $1 million.
Your customers like it more clearly.
And they like it. So, we're going to show you deals. Yeah, you have to put a deposit down, but if we don't do our job, we give you that deposit back. And we tried to create something where when we put that offer out, the person we put it out to has to say, am I an idiot for not saying yes to this? What am I missing? Why wouldn't I say yes to this? And we found that. And we're also able to, perform on that and deliver, not just have a nice offer.
I think, Brian, one of the things that everyone should take away from the show is you're selling a result. And that's the thing, like the result of it. And I think customers understand that. And that's part of long-termism. The short-term one is I'm just going to create a customer real quick and try to sell many crap. You're really out there trying to create a result, and you're putting your money where your mouth is. If I don't achieve the result, you're getting your money back. And that to me should always make the customer feel great that you're going to work as hard as you can, because you've got skin in the game as well, because you're putting tons of hours and tons of effort into this. And if after 12 months the relationship is done, all of a sudden, hey, I worked all that time. I made myself look bad for the customer because I didn't get him a deal, and I spent so much money and I didn't get compensated. So to me, that's an awesome way to build a business. Congratulations. I love that idea.
Yeah, no, thank you. And I mean, it was a little bit of a happy accident, but we've stuck to it, and it, it works. But to go back to what you said with the cost too, that working capital deposit goes 100% towards making sure we can deliver on what we're promising. We don't get a dime from that. So if we ever do have to refund that fee, we have to refund that fee, and we've sunk the same amount of money into our costs, which some people might say is a stupid business model until we have to do it. Well, we haven't had to do it, so we're doing all right.
But even if you do it at 1 out of every 20, you're still way ahead of the game. It's not even close. You're still way ahead of the game. So
it's not even close. And it's a small upfront fee. It's a nominal rounding error pretty much.
And now that you look at that perspective, how does the long-termism, what are your next goals for the next 3, 5, 10 years for yourself and your business?
Yeah. So our long-termism now is now that we've kind of figured out the model and how the model works, it's how do we put this thing on steroids? And for myself and my partner, that might mean delaying some personal gratification to grow this business through headcount, through partnerships, through investing in, different technology, where we have partners, the Harvard Business School guys, who help us with a software that they've developed on our automated outreach side. We might have to one day say, hey, we might have to buy you guys and keep you exclusively to keep it from the rest of the world knowing that you exist, So things about thinking about long-term growing the company rather than long-term gratification or short-term gratification of finances. Our revenue is fairly choppy. We could go a month where a deal doesn't close, and then we could close 4 or 5 the next month. And one struggle we've had is evening out that revenue in a certain way. And part of that is long-term thinking. We have to create a piggy bank of where we can invest dollars. We have to create a fund of expenses. We have to create personal wealth for our own, myself and my partner and our employees. But the long-term thinking was really, okay, how does this look in 3 or 5 years? And one thing we did was we hired a coach to help us take what's in our heads and make sense of it. And 3 hours into the first session, our business was in front of us looking at it from somebody else's lens. And we stepped back again and said, holy crap, like this, we're onto something here. This guy's really helping us put it into words. And it was something I was always against. I don't want to pay somebody to coach me. I grew up playing sports and having coaches. I'm good with that. And my partner pushed it on me. And the second we pulled the trigger was probably overall the best business decision we've made in the last 5 years.
Fantastic. Your customers have to love you guys, right? I mean, because you bring them, I would think, right?
Yeah. I mean, I think they respect us for sure, and I think a direct, we see that in 2 ways. One, when they start asking for our opinion on deals, right? Yeah. So we're not just a source now, we're somewhat of an authority. We see 100 deals a month plus, right? That we're vetting. So we have the same amount of eyes on deals as these bigger private equity groups or middle market investment banks do. And we're just a small team, but that comes with a lot of value. So when they start asking us for valuation guidance, or what do you think of this? Are you seeing any multiples in the industry in this space? Because we work across different verticals. That's one way of recognizing, hey, I think they think we're doing a good job. Yeah. And the other is, referrals. So one thing we don't do is, if somebody wants to sign up with us, we don't put them on the phone with a client. I've just always believed that, those referral calls are fairly eyewash BS process to make a decision. If you don't trust us based on what we're doing and articulating, calling my best client and having them tell you we're great is not going to put you over the edge. It's just a eyewash process. But our clients do refer their friends in the industry to us. hey, these guys have a fund in a different space. I think you should work with them. Or guys, we passed on this deal. We have a deal recycling program where we say to our clients, if you see something that we didn't show you, but it doesn't fit your criteria, send it to me. If we close it with another client, we're going to say thank you with a referral fee, right? So now we're incentivizing that flywheel of deal flow. And I think they do like us. I think they stick around, so that's pretty good.
You're bringing them the good stuff, right? And so that's what I mean. We have a group that does a similar thing for us, just on the multifamily side. So it's interesting. The results since you switched over in 2019, financially, have they been positive for you?
Absolutely, yeah. Absolutely. We were collecting an upfront fee that would have taken us 8 months to get previously. And we were turning the value of a single client, from X to 5X, potentially 10X. Our deal size, increased, right? In this dramatically in the sense of the revenue that came into us. But we also added the right customers for that structure, right? So our first structure was a monthly retainer. We didn't necessarily care if you close deals. We were just trying to get you in front of deals.
Yeah.
When you switch to you have to close the deal, well, we got to make sure we're bringing on clients that can close deals.
Yeah.
So, when we start working with funds that are $1 billion, 800 million, 700 million, with a track record of dozens, if not 50 plus deals a year, things start going in our favor.
Brian,
so that was a shift.
How do you see the future of valuation of companies? We're in a different market cycle now than we were 2 or 3 years ago. Interest rates are affecting things. Where do you see the valuation of companies, and how is that going to affect your business?
Yeah, so it's changed in the last 2 or 3 months, to be honest. There's venture capital money's drying up, and it's drying up for the companies that were on the fringe, but it's not drying up for the good businesses. Valuations aren't drying up for the companies that are really doing well. Where it's hurting are those, lower market companies that used to trade for 5 to 7 that are now trading for 3 to 4, and you're only worth as much as the market's willing to pay. Go ahead.
No, my last question is, how do you get these companies? This is for anyone there who has a company that they're looking to buy or looking to sell. What would you tell a person who's trying to sell a company to maximize the value of their company, to bring it to you to say, hey, I want to sell this thing. How do I make this thing more valuable?
Yeah. The first step is to get a third party set of eyes on it, right? And say, hey, somebody's got to come in and tell you your baby's not as pretty as you think it is. Right? Because nobody's company is. I'm sorry. There's the unicorn stories you hear about. There's still hair on those deals too, right? Every deal has some hair on it. So these, you talk to an owner who says, all right, I want 20 times what I'm, our top line revenue. It's like, well, the market's only paying 3. So what do you want to do here? Are we wasting our time or not? I think you have to get that third party to come in, whether it's an investment banker or someone like us who says, hey, let me just show this to a buyer and get you some feedback on what they'd be willing to pay. You're not going to pay us a dime, but they're going to pay us if they buy your company, right? So getting that outside set of eyes is a big deal, right? I played college baseball. Having somebody tell your dad when you're going through that process, listen, man, your kid's a D3 athlete, not a D1 athlete. Stop spending the money on, Vanderbilt and USC, right? So you need somebody to tell you that and bring you down to earth. And then that sets the tone for the next step, which is cleaning up that business and presenting it in a way that's clear, concise, and digestible for a buyer. The way you package your financials, your marketing tools, your contracts with clients and vendors, that all plays into the ease of getting a deal done. The companies who package that stuff and come to the table ready for a sale, whether you're represented by a banker or not, just having your stuff together is going to help you get across the finish line. If we have to spend 6 weeks going back and forth on stuff, these guys are just going to pass. There's another opportunity out there. You're not that unique. Sorry.
So the interesting thing is you went through a systems coach or whatever, you said, there's probably another bridge in here where a systems type coach for some of these companies that you're looking at could come in for 6 months, professional up the operations in some of these firms that you're looking at, and could probably increase a multiple or 2 on the back end once they clean their shit up. I would be interested to see if there's an opportunity for you to work with. You could probably have a back and forth referral thing going on where it's like, hey, I just spoke to somebody. They're not ready to hit market yet because they need to get their shit together a little bit, but this group could help them get there. I'm just throwing it out there because I love kicking this stuff around, but I guarantee
I love that idea.
Dude, there's definitely a market for. There's something there for that. I guarantee it because there's some of these like guys out there that just need to get their shit cleaned up. We know that, right?
You're right, and we do it, right? So
you guys do it. It's in house. We're vertically integrated.
We don't do it, but we make those referrals, right? So
Cool.
we have companies that consult to private equity funds on post-merger integration or quality of earnings, or go into a company and say, hey, you're at $5 million today. If you do these three things, you're going to be at 7 million, and now your valuation goes to 5x instead of 3x.
Yeah.
Right. And that, so we do have those relationships. Some owners are open to that, and some owners are, nope,
Dude,
I'm still worth 7x. And
you gotta be open to that. So, give me the surprise, and I want to have drinks with you sometime. Like I want to sit down and just I want to hear like the war stories, man. I love this shit like off camera. But give me the surprise cash flowers out there. Like who's the companies that most people are sleeping on, but they're raking in the bucks that we wouldn't know about. I would just love to hear like who's out there really making the bank that you wouldn't suspect.
Do you mean industries? Are you talking industry specific, Jake, or just company specific?
Either like I don't need an exact company name, but you mentioned like auto parts and software. But like, is it like the golf companies out there and the ice cream stand? Those are the ones making bank. I'm just being silly, but you know what I'm saying?
Yeah. Well, you're not like we work with a group now who so we work with the company Fast Signs. They do the sign and graphic.
I've used them. We've used them. Like when we're in a pinch, we've used them. Yeah.
So they have a two-part strategy where they have this brand conversion where they go to another sign shop and say, hey, if you convert to a Fast Signs, we have all these incentives for you.
Mm-hmm.
And then they have another program where they buy mom and pop sign stores and make them a Fast Signs franchise. Two different models. So like that's an industry where you might drive by a Fast Signs every day on Route 9 down the street, whatever, and you don't realize this is a national
which Route 9 you talking about? Where you live?
Are you guys in Jersey?
No, we used to be in New York though, so we're like,
all right. Yeah. All right. No, I grew up down in Jersey, and now up here there's Route 9 too in Boston. But so where we think there is an incredible opportunity, and we're seeing funds pop up in this space, is this lower market software as a service industry. So everybody wants the software company that's doing $5 million or more in annual recurring revenue. But there are a ton of software opportunities that are doing 1 to 5, 1 to 3 that have gotten there with very little investment from an owner that is just building a software to solve a problem.
3 people on a team kind of thing.
3 people on a team. They're doing $3 million, but they're making 2.7 million every year because it's all software. And the private equity fund goes, they're not doing, that's not enough revenue. It's like, yeah, but if you just put 100,000 into marketing, it's going to turn into a $10 million company.
Yeah.
We're seeing those become more and more enticing to some of the larger funds as add-ons, but we're seeing these other funds pop up that they might only raise 20, 30, 40 million, but they're going to go acquire 5 or 6 of these $2 or $3 million companies and then grow that entire portfolio, and then exit that entire portfolio in 7 years for,
because the next tier up has already been picked, right? There's less of that, and that's why.
Everybody wants that guy, right? Everybody wants the $10 million software company because you can't screw it up.
Yeah, everybody who wants the 2,000 build, 150 unit complex that's like not much deferred maintenance. That's trading it. Yeah, it's same shit.
Yeah, right next to the train station. It's exactly. So that's a space where we're seeing a lot of success where maybe it's market driven, economy driven, that people are looking a little bit lower in the market, but we're seeing some really interesting opportunities there. And, our long-term plan eventually is to become our own fund, right? And stack away some of this cash and eventually say, hey, we need a partner. We need to raise another 25 million, put together a $50 million fund and hammer this part of the market.
Besides Fast Signs, any other unique mom and pops out there that come to mind that are just crushing it?
We do have a company that rolls up pest control companies and landscaping companies around the country.
Pest control, literally the pest control that I use just got rolled up. Same thing. And then the one of the larger lawn care firms that we use on properties, same shit. And in both instances, the quality has gone down. I'll be honest with you. So
Yeah, well, because it's probably a financial buyer.
they come in and they start gutting, they gut, and the customer
exactly.
service gets declined. So yeah.
But the problem with those models are great because they're monthly recurring, they're residual, you're getting it every month no matter what, and the revenue's there. And if you have the economies of scale, you should be able to try to figure something out. But it's a great business to get into, but that's the problem. You may lose some of that mom and popness, but if they have right systems, they can utilize those systems to make that business more, more
absolutely
scalable.
So an example of that is in the e-commerce space, there was a huge push for the last 5 years for these Amazon FBA businesses. There were these funds going out and raising hundreds of millions, billions of dollars to go and acquire these, because the thesis is Amazon's a real estate play, essentially, right? There's a category leader in every category. If you acquire those few leaders, you will win those categories for eternity. So these big funds came in, they threw a ton of cash at these companies thinking we have the marketing expertise to improve all these businesses. Once they realized they didn't, a lot of these funds start, oh, that model doesn't work. And now they're selling off these entities left and right. So that was a cash grab for these, guys sitting in his basement selling widgets on Amazon, sells for $4 million to a big fund. And then they can't handle it because they think just because they have money to throw at it, it's going to work. And it doesn't always work like that. The funds we work with that sink their teeth in do a hell of a lot better than the guys that just write a check.
So, someone's got a $2 to $10 million business. They want to talk to you. How do they find out more? How do they get a hold of you guys?
Yeah, absolutely. Brian at DealGenPartners.com. You can go to our website. My phone number's up there, LinkedIn. We're pretty easy to find. We're happy to talk to anybody interested. Right now we're constantly on the hunt for companies that are looking to sell. And you'd be surprised at the interest level in anything, sign shops, pest control companies, all the way up to the software companies that we all use that everybody knows about. There's interest across the board. So reach out, Brian at DealGenPartners.com. My cell phone's on our website. We're pretty active on LinkedIn. We do a lot through that. So if someone reaches out, you'll get a response from me very quickly.
Gino, you ready to take this home?
I got to do an intro for Brian, don't I? Huh?
Man, if you want, you don't have to. It's a nice thing to do. He's a guest on your show. He's like, he's
just
coming into your home.
I'm trying.
He took his slippers off when he came in the front door. Now you're going to leave him hanging.
I'm trying to formulate a whole plan because the way we started out the podcast was me and you off camera talking to Brian. Obviously, he's a college baseball player. He goes to Babson. So, Jake, he's a lot smarter than me and you. That's for sure. So that's already. See,
it's so much. I've never even heard of Babson. But it's obviously elite, and I don't even know about it. So,
and then we're talking about on the thing that we swallowed a lot of shit. So, but he puts his shit in a blender. So, as an entrepreneur, you not really need to eat a lot of that stuff. And we've been down that road, both of us. And
I think it's like a thing called kombucha now, and it's supposed to be for gut health. I don't really know for sure, but I just listen to the trends, so.
The booch, you like the booch. So you drink a little bit of booch every day, but the booch makes you stronger because if it doesn't kill you, it makes you stronger. And then one day in 2019, all of a sudden, one of his customers says, hey, how about we do it this way? How about we change the model out? And then Brian has the epiphany of, you know what? We're doing this short-termism, this get-there-itis kind of thing. How do we actually try to create value for ourselves and put some skin in the game for ourselves? And I love the model, how he's been able to adopt that. And then from that process going, okay, I see the next iteration. How do I continue to scale my business up? And you know what? I may have to take a little less money. I may have to bring them some partners. I may have to buy somebody out. I may have to, avoid just getting the money today to buy the Lambo. And I can still maybe buy the Lambo, but some of that money's got to go into the future and worry about growing this business.
Buy the pest control, buy the sign shop. Okay. Don't buy the lawn care company because you don't want to manage those guys. But I'm telling you, reinvest in another business before you buy the Lambo. That's my 2 cents on it. But
I'm with you.
Yeah. All right, guys.
Well, thank you, guys. That was awesome. I appreciate it.
Hey, it's our pleasure. And as always, we believe in buying deals for the long term. Think in decades. I'm Jake. He's the G Daddy. And you can find out more at 100yearrei.com. We'll see you next time.